East week, where we reflect on the market open in Asia this morning. Brent is trading a little bit up, nothing too dramatic, but nonetheless, there's been a squeeze up on the oil price over recent days as the fallout from the big Ida hurricane in the US is leaving big marks on US production, which remains substantially shut in still nearly a week after the storm has passed. Let's kick off this morning with Dr. Carole Nakhle, CEO of Crystol Energy. Carole, welcome back. Happy Thursday, so to speak, if your weekend is about to start. If it's not, well, you have my commiserations. Nonetheless, the markets are a little bit up, and we're seeing, again in China, some powerful data coming through of inflation and economic activity. Your thoughts this Thursday morning?
Good morning, Sean. Actually, yeah, I have a big adventure this weekend coming tomorrow, actually, with the caravan moving again to Germany. And I call it adventure because it's a really nightmare just to fill the forms. For 4 people in a household, it took a couple of times overnight. So traveling today is not what used to be, despite, some countries removing restrictions. And this continues to dampen enthusiasm when it comes to holidays, especially when you want to do all these PCR tests. So that's one thing to keep in mind about the summer season. And it kind of contributed to the slowdown in demand. Well, today, what we have, I mentioned the big event today, that is IDA's ramifications, right? So that's what we see today in prices. A slight upward pressure on prices. But we should think about, if we take that event on the side, if that did not happen, where prices would have been. So there's a kind of slowdown in the recovery momentum around the world. I mean, China is definitely has already been there in this kind of slowdown for a while before anybody else. But today we're talking more and more about slowdown. And if you look at the Federal Reserve's beige book that they published, I think yesterday or before yesterday, I lost track of dates, and they kind of reflect this kind of dampening sentiment across businesses, in addition to what we saw, the dampening sentiment across consumers. So what we see today, this upward pressure on price, is not really a reflection of strong fundamentals. It's a temporary development in the US that's likely to fade away, and that would leave us in a weaker spot than where we were a few months ago. And I think this is kind of what we should expect in the coming months. I look at the various forecasts, at the various data, all the enthusiasm that we saw at the beginning of the year, actually in the second quarter of the year, about the third quarter of this year, seem to have kind of been replaced by a warning about outsized risk. For example, yesterday was Morgan Stanley talking about that. So we're not in a safe place, but that said, we're not in a bad place either. It's just a relative slowdown in the momentum of the recovery in economic growth globally, China, US. Here in Europe, things are looking not bad because they were catching up with the US and China. But overall, we have this kind of slowdown in momentum of recovery, which is also impacting oil markets. But because of IDA, it has disguised a little bit that effect.
Daniel Richards, Senior MENA Economist at Emirates NBD. I'm sort of scratching my head a little bit this morning, Daniel, wondering why prices are not soaring to $80 a barrel. We've got more job openings in the US, rose to a record 10.9 million than there is unemployed. So more jobs available than there is unemployed people. Wow. Meanwhile, 80% of US oil production in the Gulf of Mexico remains shut in. We've already seen more cut from the Ida storm that OPEC has put back in the last month and a half. This surely is ingredients for $80. Why is it not happening?
Yeah, I'm sure. I'd agree with all those points that Carole just made, essentially, but very fast growth that we've seen is definitely slowing, and there remain major imbalances driven by that, in part by what was such a speedy recovery. They remain in play, and they're really weighing on output around the world. You've seen that in German data this recently, while some of it exceeded expectations. You see that ongoing impact on the auto sector from those chip shortages. That's weighing on economic growth there, and that's not likely to get better anytime soon. When equally in the US, things have improved, and you have a record number of job openings. That is a bit of a backward-looking measure. That is from July, before we saw that very sharp surge in Delta cases in the US. I think the 7-day moving average is back around 150, 160,000 cases now, which is not insurmountable in a country where some regions have only around 50% vaccination rates. And then you have an ongoing question of, yes, we have these job openings, but yet the last NFP report came in way below expectations, indicating there remains some friction between these job openings and people getting back into the economy. The two sectors that performed worse in those NFPs were the hospitality and the retail sectors, indicating that people are still maybe reluctant to go back to work, and that's going to weigh on that ongoing recovery. And we did see the end come to some of those fairly generous, in some cases, federal support packages this week. Will that prompt a more rapid take-up of these massive job openings? Perhaps more in question, given that some of those states and counties that rolled back on those support packages sooner haven't seen a more rapid surge than elsewhere. So it's likely a large part of it is ongoing concerns, health concerns, or childcare concerns, and that isn't going to be ameliorated while you still see these high COVID daily COVID cases coming in the US. So yes, we've come a long way, but there remain is still a coronavirus story, and that hasn't gone away anytime yet.
Let's welcome back Omar Al-Ubaydli, Director of Research at the Bahrain Center for Strategic International and Energy Studies. Omar, we've had some further news overnight about the potential recurring restart of the Iran nuclear talks. The outlook seems not great. The UN Atomic Agency saying that Iran is in defiance of the nuclear deal. Your thoughts of the outcome or the noise that's being made, and where does it go from here?
Thanks for having me. I think that the persistent problem with the Iran deal is that there's been a systematic miscalculation by the US regarding the extent to which Iran feels it needs to re-enter the deal. The US's departure point for negotiations under Biden has been the assumption that Iran is, on its knees and is looking for respite, and that this can be used to extract its concessions. When a more sober look at the situation that Iran has carved out for itself suggests that it's not in a hurry. It doesn't need it. It feels it has secured what it needs and can continue to get what it needs without those sanctions being lifted. And moreover, there are now vested interests in when you have something like the IRGC Revolutionary Corps who get involved in the economy much more when there's sanctions. They now have a vested interest in the persistence of sanctions. And add on to that, you have a hardline government and a long-term ideological difference between the US and Iran on this issue. So I think that what's going on is that this miscalculation by the US is persisting, and it's going to become even more apparent with the new hardline Iranian government. So at the moment, I would say that it's looking quite unlikely that things will go anywhere, and the Iranians won't really have a problem with that.
Carole, the OPEC Plus supply agreement, as articulated earlier, is to add about, over the course of a month, about 12 million barrels. Over the course of 2 months, 24 million in August and September. We've already seen that amount of oil cut from the Ida shut-in, and that's still not resolved. So we're going every day, it's another 1.5 million barrels kept off the market. Do you think this is starting to get to an equation where OPEC Plus needs to look to release maybe some extra oil, or the US Strategic Petroleum Reserve, or would that be uncalled for yet?
Well, if they want to see prices crashing down, they may want to put more barrels in the market, because you see, we have to be careful. Now that there was one article in the news items that you shared this morning comparing Ida with Hurricane Katrina. I think it was 16 years ago. And they said that today you still have almost 80% of US production not coming back online, whereas compared to the time when Katrina hit, over the same period, we saw much more than that. Katrina 77, 80% coming back on stream, but today it's much less than that. I think you see it's a very misleading comparison, because today's market fundamentals are very, very different from when Katrina hit, partly because remember during that time in 2005, 2006, people were worried about peak oil supply. Today, we're talking about peak oil demand. And there you see you had very strong increase in demand. If you remember, Asian countries, the BRIC countries, and supply was struggling to keep up. So I'm not too worried about this kind of temporary supply disruptions in the US. And that's why we're seeing the current slight upward pressure on prices, but it does not justify any panic to require, putting more of the strategic petroleum reserve for that reason, though the US government is selling some of its SPR for a different reason, because they don't need the money, etc., according to a law that they passed a few years ago. But would it need to OPEC Plus to put more barrels in the market? I don't think so. The demand outlook does not look as strong as people expected. On the contrary, if you look at the various forecasts, today they have been revised downward compared to previous forecasts.
Just to pick up on that earlier point, Carole, about the idea that why this scale of shut-in wouldn't be putting more upward pressure on prices when there appears to be still a robust recovery in the US with 10.9 million jobs available, more than the unemployed, which is a record. Why is that not seen as, with inflation also bubbling away? We saw in China, the data, China factory inflation hits a 13-year high. Why is that not momentum, do you think, to elevate this oil price?
Well, there are different ways to look at it. So it's not a single event that we can focus on and that will justify the behavior in prices. But you mentioned, for example, unemployment rate. We have to understand, when I did my degree in economic science many years ago, one thing caught my attention about the definition of being unemployed. These are people who are, actively looking for a job and are not able to find one. But when there are people who dropped out of the workforce entirely, they will not be counted as unemployed. So we have to be careful with the unemployment figure and not think that if it's improving, then everything is booming. So that's one thing. The other thing, inflation. I don't think inflation is really a good recipe for the economy. On the contrary, it's a source of concern. It has been on our mind at least from the beginning of this year. It's becoming more and more problematic when it goes out of control. So far, central banks all around the world, they tell us, no, it's okay, it's manageable. It's primarily due to supply chain constraints, but they are, gradually changing their perception of the structural damages that increase in prices and cost of inputs happening all around the world. So on balance, I'm not quite sure how I see this, how I would read what's happening today as a positive development. I see it more as putting the brake on the recovery. It is not going to reverse the recovery, but it's slowing down the momentum.
Daniel, looking at the Emirates NBD report today, just speaking of sort of going a little bit local on this, on economic recovery, the Dubai PMI rising a little bit, where a lot of the world, we saw PMIs earlier in the month reporting declines, but in the Dubai, UAE, things getting a little bit better. Your thoughts on a local analysis of economic recovery versus the global one, which seems to be stalling?
Yeah, so pretty positive reading from the Dubai PMI this morning. Only ticked up marginally, but still remaining positive. And as you say, that's in contrast to what we've been seeing in some other countries around the world, especially those Southeast Asian manufacturing PMI surveys, which as they dealt with a Delta surge, have actually gone back under 50 to that negative contractionary level. So I guess the contrast is that, well, one of the key differences is vaccination rates. Some of these South Asian economies don't have high vaccination rates, and when they are faced with a surge in coronavirus cases, they have to act quickly, and that's what's happened there. Here in the UAE, of course, we benefit from fairly high vaccination rates, and also there's some other things. I think the tourism sector was the strongest rising amongst the three singular sectors surveyed in that Dubai specific PMI. It came in at a 21-month high, and that's looking back for August. We'd only expect that, given what we've seen in terms of recent news with regards to the UK travel restrictions, and just this week as well, Saudi Arabian travel restrictions, that will improve even further. I think we can look forward to barring, no one wants to put anything on the line these days with regards to COVID and how it's going to progress, but barring any severe setback, I think we can look forward to a pretty strong winter for the tourism sector, especially as well with the Expo coming up.
Yeah, that's certainly the hope locally, and it'll be interesting to see as the appetite for travel in the long haul travel, which is what we're talking about to get tourists to Dubai. We seem to have a lot of short haul across Europe over the summer, but will we see the long haul return? Let's just wanted to get your views a little bit, Omar, on this news overnight of the US putting what's called drone task force into Bahrain's, where the US Fifth Fleet is based. Is this an escalation? We had earlier in the week a former US diplomat on our show who was sort of scolding the markets for not paying closer attention to the rising tensions between Israel and Iran. Now we're seeing the US elevate their resources in the region. How do you read that?
First of all, just continuing on the point I made earlier about Iran, the miscalculation by the US is actually, unfortunately, part of a quite a persistent trend of poor quality foreign policy by the US. And what we've seen over the last 20 years is that there's been a significant decay in the quality of foreign policy, whether it's the sort of diplomatic side or even the side integrated with security and defense concerns. And now with this, I mean, basically the tour that the ministry, the defense secretary was conducting in the region and where this was announced is supposedly, on the face of it, an attempt to convince the US's local partners that and allies, or whatever you want to call them, that the US is here, and this is supposed to be something, a confidence building measure. But I think that the reality is that the US has demonstrated quite clearly that it has no interest in doing anything involving military deployments, and even this, I imagine, is much more of a surveillance and shop window style indication, and I think that the countries in the region realize this. They're not going to say no to a US defense secretary visiting, but you can see in terms of, for example, the UAE's recent overtures with Turkey, Saudi Arabia with Qatar, and Saudi Arabia with Iran, in explicit terms, the different countries have decided that whatever differences exist, they probably should get a head start on resolving them, under the assumption that the US is not going to be either intermediating or being a regional police force. And to be honest, it's probably a good thing that this sort of fake policeman act that the US has been doing for the last 10 years is drawing to a close, because you had a situation where sides were being a bit more, how should we say, aggressive or assertive than they might rationally be, possibly based on an incorrect assumption that the US would back them. So now that everybody realizes the US is basically not interested, and even if it is interested, is unfortunately incapable of articulating a coherent strategy or doing anything vaguely sustainable. And so everyone, this is just, I say, just, I mean,
that's quite a significant statement in the sense, coming out of Afghanistan, that if the US, as the protector of the sort of oil supply of the world coming out of the Gulf, is in a question mark, is that not a major moment of change?
I think that first of all, it's been a transition, although perhaps there's been, it's become more apparent of late, but the US disinterest in the security of oil supplies, if nothing else, has been, that transition has been apparent over the last 10 years with the rise of shale oil, and you've had all sorts of security incidents both in the Straits of Hormuz and in the Bab el-Mandeb Straits on the other side of the Middle East, and the US has been generally not interested in taking any massive steps, even though it has the military capability to do a lot more than it has done. It hasn't taken the steps of the attacks on Aramco. You've seen the Houthi attacks and so on and so forth. So I think that American politicians are very good at talking the talk, but I think now everybody's come to the realization, especially with the very, very humiliating manner in which the US retreated from Afghanistan and left even its military hardware and citizens, let alone its partners on the ground, that it's not really a reliable partner for any sort of significant activity in the Middle East.
Carole, I thought you were going to say you were leaving London to go back to Germany so that you can vote in the election there with the Chancellor and the Parliament there up for election and the end of the Merkel era. And it's kind of passing outside of Germany as relatively a non-event, only the most important country in the European Union and perhaps one of the biggest economies in the world. What's your own sense about the outcome of that election without getting into the granular politics of it? Does it matter? Should we care? Should the markets be paying attention?
I mean, of course, Germany is an important player globally and regionally, and as an economic power, actually, and that gives it some political clout. But I cannot comment really on the outcome of the elections. I'm not expecting massive changes in terms of impact on, let's say, what we're discussing today, the oil market or whatever, but there could be some more dramatic changes when it comes to Germany's aggressive stance on climate change. So we might see more push towards greener agenda, for example, than we have seen, although Germany has been a leader in that respect, with very ambitious plans. They didn't get it always right, but this could be one thing that we can sense in Germany happening in that direction. And how that impacts the EU overall climate change policy remains to be seen. There is the other dimension, which is when I just, here I don't follow really in detail the debate. I've had enough on my plate than to follow the German elections at length. But you can see that, for example, whoever is running for the elections is not really discussing, is really saying that they are not going to go into lockdown modes anymore, because they realize that has frustrated people a lot, and more people are refusing, to go into whatever we went on before. This shows that the delicate situation where anyone running for election is. However, I was hoping that you would ask me, Sean, about something that's happening already in the UK, and probably Germany is going to follow suit, as well as many other countries, and that would have an impact, direct impact on spending, on business activities. And that is, we're already seeing, at least here in the UK, the move towards tightening tax rates or increasing taxation on people. It's a big topic in the UK. And if you remember,
I saw the debate yesterday at the Parliament. Boris Johnson was taking a few hits on it. Yeah. Exactly. The sort of austerity that's coming to pay for all this stimulus.
And it's going to get worse, not just, the UK.
That's why you're leaving London, is it then?
Probably. That's why, just enjoy a little bit of more.
Quick, get the plane.
Buy more shoes, as if I'm wearing any, But yeah, that's what should be bracing ourselves to. And nobody in the German elections is talking about that. But once they get in control, once they secure their seat, then we're going to hear a more aggressive story, also in terms of, imposing taxes, higher taxes to pay for all the stimulus packages that governments have done through the corona pandemic.
Well, here in Dubai, when we were all trying to read the tea leaves as to why property prices were booming here in the first half of the year, that was one of the answers, that all of the big money, high net worth individuals were getting out of Europe and coming here ahead of this tidal wave of austerity. Let's get the survey question up before we close out. Ida, the hurricane, rather than your aunt, has already cut more supply than OPEC Plus has added in August, September so far. So Ida has generally been reported that it's wiped out 20 million barrels of production, obviously not a day, but in total. My question is, will the continuation of this trend, because the reports are that there's at least another week or two in recovery here, this trend through September be enough of a catalyst to send Brent to $80 a barrel, that big number that Goldman Sachs has been screaming about for some time? We haven't got there, but will this be what gets us there? Daniel, we're never too far away to talk about Fed policy and monetary policy and the big word tapering. My question to you is, has the world's biggest Fed central banks are in the process of moving what we all thought was a definitive when to now back into the if column, that this if this is even going to happen at all, where this accommodative policy, obviously Carole talked about the fiscal side on austerity, but the monetary accommodative policy, we were all of the expectation it was a when it was going to end. Was it last month? Is it next month? Now is it moving back into the if column? What's the house view at Emirates NBD?
Yeah, so I don't think it's quite gone that far yet. And it's, of course, important to differentiate between the extra liquidity that's been pumped in and those asset purchases from the rate hikes. Rate hikes are still a long way off. We don't expect those till 2023, but we would still expect that tapering to come. The question is when, not an if. I think it's a when. And the September meeting looks pretty less likely now, given, as I mentioned before, that very weak job support for August that missed by some 500,000 from expectations. If we saw a few more months like that with very weak NFP reports and some other data points coming in below expectations, maybe it might become more of an if, but at the minute, I think it's more of a when, just a less soon than it had been prior.
Omar, we saw yesterday Saudi Arabia announced the reopening of travel between the kingdom and the UAE, which had been locked down for the last 2 months, and generally emerged in the moment in which there was the big OPEC sort of blow up, if you like. I'm just wondering your views. Last week, we also had, earlier this week, the announcement by the UAE with all sorts of new incentives to attract foreign direct investment and so forth. And this narrative of this sort of rivalry between Saudi and the UAE in terms of economic center of the region, just welcome an update of your thoughts on this and where it might go.
I think that by the way, very briefly regarding the property price increase, one of the effects of stimulus money and excess liquidity is rising asset prices, be they financial assets or property prices, despite an economy that's not doing very well. And that's one of the reasons why you've seen stock markets, rising so much over the last 3 years, despite the fact the economy hasn't been doing so well. Regarding your question, I'm still a lot more sanguine than most other people about this kind of thing. If you just take the simple example of the European Union, Paris wants to be an economic center, Berlin wants to be an economic center, London, Luxembourg, etc., etc., etc. There's plenty of room at the table. And the reality is that in the case of Saudi Arabia, there's been a lot of really bad economic policy in the last 50 years. And this sort of competition is good in the sense that it helps all sides remain on their toes and develop better policies. You've seen the UAE's Prime Minister, Sheikh Mohammed bin Rashid, in the last couple of months, regularly announcing new initiatives and new attempts at improving the regulatory and business environment in the UAE. And I'm sure that part of that is a response to the increase in competition with Saudi Arabia. Of course, whenever you have competition, there's going to be some losers on the margin. But overall, I'd much rather live in the Middle East or in a Gulf where the governments are in general enacting good quality policies than one where there's just one dog at the top of the table and everybody else is faffing about and enacting poor economic policy. So overall, I think it's a much more better thing. And I would use the European Union as a clear example of how a polycentric economic capital system is entirely consistent with the economic welfare of the general citizenry.
That's an interesting insight. I was going to even go further and ask you about the fact that the Gaddafi brothers seem to be free, but that will have to wait till the next time because there's something going on there. I haven't quite got my head around it, but clearly something's moving.
They're trying to avoid UK taxes, I think.
Yeah, so they're on the move to those places that are accommodative. Let's go to the survey result and give Carole the last word this morning. Oh, we've got a 50-50. So that's always good when that happens, which is essentially, I've no idea, but it could happen, obviously. Clearly, if the US oil production remains locked in for a while, it's problematic and supportive, obviously, for the markets. Carole, your final thoughts, obviously, Thursday, the end of the Middle East week, ahead of Sunday when we have some real brain power on the stage, giving us the reflection. Tell us some things that they need to be talking about on Sunday that this end of the week will give us some direction of where things may be going.
I mean, here really what to watch for. I think there is an ECB, European Central Bank meeting, and we might get some more insights into their perception of where things are going in the region and see how that compares with what the Federal Reserve in the US has been telling us. And so this for me is the most important thing to watch for the rest of this week. But I would say that I was surprised to see the survey results 50-50. I don't know how often you get that. I know it's usually very, very close, but it is a kind of reflection of what's going on in the market today. You know, mentioned earlier, by the way, vaccination, and yesterday COVAX announced that it's going to deliver 25% less vaccine than originally planned for the developing countries. So that's another thing we have to bring in to what's going on in the coming months or period. But I really hope, you know, all my pessimism today, because I woke up perhaps earlier than usual, is going to be proven wrong, and we're going to see $80+ to please everyone in terms of oil producers.
Well, certainly as far as them, perhaps not the people driving cars in the UK. The wrap up there on the other 50-50 kind of data point that I think is worth paying attention to and being reminded of as to where the economic direction of things may go is the fact that in the US, only 52, I think it is, % of the population is vaccinated. There is a ginormous percentage of the US population, despite the sort of narrative. We got all the headlines of vaccination. We've got less headlines about not vaccinating, but there are 160,000 infections a day in the US at the moment and 1,500 deaths every day from COVID in the US. So still a very, very big challenge and that's going into the winter. So something to keep an eye on there. The plus side, if there is one on such a dark story, is that going into the summer, there was only 500,000 people being vaccinated a day in the US. Suddenly that's popped up to 1 million. Surprise, surprise, the people who were hesitating are getting vaccinated now, at least 1 million a day. So that is a optimistic outlook for the US narrative, but always worth keeping an eye on that. Let's wrap up. Thank you, Omar in Bahrain, Daniel in Dubai, Carole in London for another 5 minutes. And we look forward to Christoph Ruhl, wherever he may be on Sunday, and Mike Muller back at this table trying to explain all that's going on to us. So we really look forward to that. Have a great weekend, everybody, and we'll catch up with you on Sunday morning. Cheers.
Thank you. Bye-bye.